Hi guys, let's talk about identifying ranges today. How does a range form? After a volatile move, you will normally see a rebound before the price reverts to a mean somewhere in the middle. This is normally where there is a combination of exhaustion from the aggressive players and strength from the passive players. The end of the reversion back will be the other extreme of the range. There's always an initial high and low of the range. We mark them immediately for future reference. So you can see here the big move, the low, the high, and immediately, the range is established. Managing the range. The range is where we spend the majority of our time in markets. There can be trends, but they always end up ranging. This is where the money gets transferred from the greedy and fearful to the calm and collected. Retail will generally be buying highs and selling lows in hopes of a breakdown or break up. Rarely does it happen after a big move. So we can abuse these emotions each time we get near a low or a high. The greedy and fearful will run in and bet the maximum. On a break, this is where they end up trapped and liquidated when we revert back to the mean. Here can be seen quite, obviously, different types of charts. Option 1, you can either wait for the absorption to start for entering. It can happen quick, it is more risky, but the reward is faster and higher. Option 2, or you can wait for trapped players to start puking their positions, pushing us back into mid-range. The highs and lows will always be tested first, almost always once. The first time when price is visiting the area, it is important to watch for volume and order flow to see what the reaction is like. What you want to see is a large absorption before stalling and moving back into range. Here, over here, we see 58 million of buying happened, but we didn't move higher. You could enter a short when you see millions being absorbed before any further move. Or you can wait to enter when the buys start to unravel, as it is safer and less risky. Profit taking. Trying to play both sides of the range and stretching trades from one side to the other is hard, as we can retest same side multiple times before going on to the other side. As you can see in the picture from the last play we described, we went from the top of range down to the middle, and then instead of going opposite, we ended up retesting the same high. If you had held in hopes of getting to the other side of the range, you would have likely round-tripped your entire trade out of fear. For this reason, profit taking in the middle of the range is best, as liquidity is high and profit is guaranteed. So this is where you take your profit, and this is where you play it again. When do ranges end and trends start? Trends start only when demand or supply are either added or cut. Ranges end when either market orders have enough power to push through the resting orders, or the resting orders are light or removed after being done giving liquidity. This is when trends start. Notice how thin the move up was on the range break compared to the previous move in the area. Liquidity was removed and market orders hit hard, breaking us free from the range we had. You can see it over here, very thin move to the upside, compared to this one especially. Guys, if you have any questions about this, make sure to ask them in the comments. I will do my best to ask them as soon, to respond to them as soon as possible, and make sure to subscribe if you like this stuff. See you guys soon.